The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. Scott Earhart here with Insurance Agency Marketing Services. Thank you so much for taking the time to join us this morning. I think you're going to find the presentation today very timely and very valuable information. We are going to take a look at Social Security claiming and marketing today. Great if you're looking for a new outlet to connect with your clientele or prospects. I think this is a great session to be watching here at the start of a new year. In order to help us go through this, we're going to have one of our top producers, one of our top sales coaches, and our Social Security expert, Dave Pimper, give a presentation here shortly. Dave, can you hear me?
I can. How are you doing this morning?
Doing well, Dave. Doing well. Thank you so much for your time. We greatly appreciate it. That being said, I'm going to go through a few introductory slides here, and before I do that, just a couple of housekeeping items, and then we'll get control over to Dave and get into the meat and potatoes of today's presentation. First housekeeping item, and probably the most important thing that you will hear me say today, is on the top right-hand side of your screen. That's our phone number. Our number here at IAMS is 800-255-5055. If there is anything that we can be doing to help you in the life or fixed annuity markets, please do not hesitate to give us a call. We'd absolutely love the opportunity to be chatting with you. Second housekeeping item are polling questions. I'm going to launch 2 or 3 polling questions throughout the presentation today. They are just simple yes or no questions. If you would please take the time to participate in them, we certainly appreciate that. And then the final housekeeping item are questions. We're going to throw quite a bit of information at you here in a relatively short period of time, so I'm sure there will be questions. Dave does such a great job of taking time to make sure we get as much answered as we can, so feel free to type them in to the questions box. At the end of the presentation, we'll go through as many as we can and try and get them answered while we are live and in session. If we can't get them answered while we're live and in session, Dave or I'll be more than happy to follow up with you and make sure we get you the proper answer. That being said, let's get into a few introductory slides here. And the first thing I want to talk about are the IAMS Business Builders. And I'll start with our referred producer program. Our business here on the wholesale side of the industry, very, very similar to yours in the field, in that one of the best leads we are ever going to obtain is a referral from one of our valued clients, or you, our valued producers. So when you refer another licensed advisor over to us and they pick up any contract through IAMS, we're going to send you a $50 check just as a thank you. Now, where the real money comes in is as your referral writes business, you're going to receive a 20 basis point override on that written business. We cut these checks at least quarterly. Steve and Charles, our ownership team, sign checks for thousands and thousands of dollars at a time, so it can be very, very lucrative for you. With that in mind, if you can think of anyone that could benefit from working with IAMS and utilizing our services, feel free to type their information into the questions box or email it to me, scott@iamsinc.com, or when I call to follow up, just let me know who they are. Me or someone on my team will do the best we can to get them recruited over to IAMS and hopefully put some referred producer dollars in your pocket. Moving on, the most popular program that we offer is our marketing reimbursement program. And rough number on that, for every $100,000 premium you place with IAMS or to IAMS, we're going to put $100 into your marketing reimbursement account. Now, what makes this such a popular program is we put very, very few restrictions on that account. We truly do consider it to be your money. So what I mean by that is we're not going to make you roll the account out monthly, annually, biannually, anything like that. You can hold it there as long as you'd like to. We're not going to cap the amount that you can earn in it, so you can grow it as large as you would like to. And then we put very, very few restrictions on vendors that you can utilize. We're not going to tell you who you have to utilize for your marketing or business needs. We just want this program out there to show you that we are trying to partner with you and prove to you that we are trying to partner with you in growing your practice. If you'd like more details on the marketing reimbursement program, or if you need to know what's in your account, just let me know. I'll get with the accounting team. We can get that information for you. On to IME's New Producer Builders. This is going to be geared towards anyone who's new to us here at IMES, or if this is your first introduction to insurance agency marketing services, you will qualify for this program. This is based on production within your first 180 days of being licensed with us. And as you can see, there are 3 levels that you can cash in at, and there's great options at each level. You'll see cash rewards, business building tools, personal perks, all available to you. If you'd like to know where you stand for the New Producer Builder, or if you'd like to have a conversation about what we can be doing to assist you to step up to that level you want to achieve, let us know. We're here for you, and we certainly want to assist you in obtaining your goals. Back office support. This is the heart of who we are here at IMES. We help you to work harder, or work smarter, not harder. I said that backwards. We definitely want to make your business flow easier, and we're going to do that with great business building tools and resources. One of the resources that you're going to see are our daily webinars. You're going to see some great information today. We do archive the vast majority of them, so at your fingertips, you'll have some great training resources. Got a lot of business building tools. We went through a couple of them. I can get you information on the full suite of programs that we offer. We're here with full case design assistance and life and annuity quotes. We've got staffs here, marketing staffs with a ton of experience, definitely ready to answer your phone call and help you with the case design and get you the illustrations you need to help you facilitate that sales process. Forms at your fingertips. You can get forms online at imesinc.com. You can get forms by calling us at 800-255-5055. We'll get them drop shipped directly to you, get them emailed to you, whatever you need to make sure you've got all the necessities to write that business. Submission to commission support with our new business staff. Amber Williams and her entire team do such a great job of scrubbing apps, submitting apps, tracking apps, and helping you to get commissioned that much faster. Top sales expertise and coaching. You're going to see one of our top sales coaches today, or hear one of our top sales coaches today, in Dave Pimper. We've got a lot of great experience and a lot of great producers that have agreed to take some time out of their busy practices to help our other advisors grow their practices. It's a really unique thing here at IMES and something that brings a lot of value. And then our paperless contracting system. We all know the pain of filling out licensing forms. We're going to take that away from you. We're going to have you fill out licensing one time, and we can appoint you with up to probably about 95% of our carriers are on our Efficient Forms platform. So we're really going to help you save time in the licensing needs there. If you have questions on any of this, let us know. We certainly want to make sure that you're aware of all the tools that we have to offer for our advisors. Creative Marketing Solutions. We do have an in-house creative team here. We've got a real original name for that department. We call them IMES Creative. Jacob Tedlock and his entire team do such a great job. We've got ready to go turnkey solutions for you that are professionally written and can be customized with your agency information, newsletters, postcards, handouts, flyers, whatever you need. We've got a lot in our library, and we're constantly adding new things to it. Jacob and his team would be more than happy to show you mock-ups and get your information imposed on those so you are ready to market to your prospects and to your clientele. Agency Solutions, full branding material available here. If you haven't created a consistent brand for your practice, I'd tell you to do so. It definitely will help you with name recognition, help you in ways that you might not think, as far as beyond name recognition and validity of your firm. Logo design, business cards, brochures, stationery, advertising, all available to you here. We can do it all. And then digital solutions, websites, marketing strategies, social media consulting, email consulting, newsletters online, all available to you here through IMES Creative. If you're interested in any of this information, please give Jacob or anyone in IMES Creative a call here at the office. They'd love to chat with you about what we can do to help you. Our website, I've mentioned it a couple times throughout the introduction here, imesinc.com. A lot of great tools available for you. Quote engines, forms online, links to carriers and other news sites, product grids, all available to you. We did just add a new E&O partnership, so you can purchase E&O at IMSInc.com. A lot of great things there, and we're constantly expanding. So if you haven't gone out and registered at IMSInc.com, I'd encourage you to do so as soon as we're done with this webinar. You'll find a lot of great tools there, all there to help you. Retirement Analyzer, another tool that we make available to our advisors. And what the Retirement Analyzer is it's really a holistic analysis of your clients or your prospects' retirement funds and how long they are projected to last into their retirement years to help them achieve their goals, whether it's income or legacy, whatever it may be. And why I like the Retirement Analyzer so much is I think it's a great closing tool as well, because simply by clicking a button, you can show that client how much longer their money will last or how much more money they'd be able to leave as a legacy by utilizing the strategies or products that you're presenting to them. Really, really neat tool here. Marcus Solar in our office is our point man for Retirement Analyzer. So if you'd like to learn more about it, please give him a call in the office. We do have a 90-day free trial available to our licensed advisors. We've got great webinar trainings to help you learn the system and utilize the system to its fullest. So please let us know if the Retirement Analyzer is of interest to you. IMS Wealth Management. This is our newest company, and we're very excited about it. I'm going to launch a poll here as we talk about it, just asking you if you'd like to learn more information about IMS Wealth Management. What happens if you click yes is you'll receive an email with some details on the firm and on the RIA itself, and then you'll also receive a phone call from one of our onboarding specialists, probably Mike Hansen in IMS Wealth, just to chat with you about who we are. We designed IMS Wealth about coming up on 2 years ago, and it is there really in the same culture, same design as Insurance Agency Marketing Services. Want to be a service-first organization to provide top-level support, top-level platform for independent IARs. We can do that with a lot of technology. The 3-ring guarantee is still there. You'll talk to a live person when you need it. Got a lot of great people working there with a lot of great support for you. We also do have a great training system in place. If you are thinking about adding assets under management into your practice, we can help you get prepped for the Series 65 exam and pass it. We've had a lot of success with that. Also, if you're an existing IAR and you are considering making a move, I'd tell you click yes, have a conversation with Mike. I think you'll be really impressed with the technology package, with the platform available to the client, and more than anything else, I think you'll be really impressed with the fee structure. Very strong value proposition here. That being said, I'm going to move on from this polling question. If you haven't taken the time to click yes or no, if you would, please do so. We'd certainly appreciate your participation there. Thank you, everyone. And I hate to do it, but I'm going to launch 2 back-to-back polls here, and this one's pretty important for those of you who are have heard about our life and annuity academies or are interested in one of our life and annuity academies. We are coming up on our first academy of 2019. We are going to be in mid-March 2019, and we're very excited to get an academy in this early. What we do in our life and annuity academies are we will bring you in on a Wednesday, have an evening session on Wednesday, have a full day Thursday, have a morning session Friday, get you out hopefully on a plane by midday or just after lunchtime and home in time for dinner. We do 3 to 4 of these a year, and they are probably one of our most popular live events that we do. It is all expenses paid. What we will do in the Life and Annuity Academy is we'll bring in a lot of our internal staff. You'll meet myself from the annuity department. You'll meet Amber Williams, the head of our new business team. You'll meet Jacob Tedlock, the head of creative. You'll meet Charles, our hiring, the head of IMS Wealth Management. Of course, you'll meet Steve Murray and Charles Hiring Sr., who are our ownership team here. and we're going to talk to you about who we are here at IMES and what we do to help you grow your practice, the tools, the techniques, the sales concepts that we can bring to help you grow your business. We're also going to bring in our sales coaches from throughout the country, Dave Pimper being one of them. And I think that's the biggest value proposition with the Life and Annuity Academy is in order to be a sales coach with IMES, not only do you have to talk the talk, but you also have to walk the walk. And what I mean by that is our sales coaches are top 1% of commission and fee earners in the industry. These are top producers in the financial marketplace, and they're going to share with you exactly what it is that they do in their daily practice that makes them so successful and give you the ability to take that home with you and apply it in your practice. So very, very worthwhile information here. That being said, since I do have Dave with us, Dave, is there anything you'd like to add about the Life and Annuity Academy?
You know what, Scott? What happens with, and I'm biased, of course, because I coach with IAMS, the FMO, but I think a little different in the kind of dog and pony show that the FMO is putting on is that it truly goes in and is showing you ways to market your practice. It isn't just a product pitch. And not that there isn't some product, because you certainly, a person who's educated with product, there's no doubt they can be a better advisor, but how to market. So whether that marketing is seminar marketing or having a radio show or direct mail or referral lead generation, I mean, it goes on and on and on. I think what IAMS does that's a little unique in the industry is that the majority of the time is giving you ideas of how you can build your practice, how you can bring more assets under your management, whether that be fixed indexed or securities or fee-based money management. I think IAMS does a really good job of knowing that the better the producer does, the better the FMO does. And no doubt after basically 32 going on 33 years of the same ownership, you don't see that too often in the FMO arena. That's what you have here. I was just listening yesterday, actually, on the, I don't want to drag this on, but I was watching the college playoff game, and they were saying that in the last, if you can believe this or not, in the last, it was either 2 or 3 years that Alabama has been through 30 football assistants, and Clemson has been through 3. And that consistency of coaching has certainly helped Clemson. And what happens is the consistency of ownership has certainly helped IAM. So I think that's the big difference. If you're looking to go to kind of a product show, this probably isn't a good academy for you. If you're looking at ways to increase your production through marketing, prospecting, referral sources, then I think it's a very good academy to attend.
Absolutely, Dave. I appreciate the kind words. Appreciate you chiming in. You're always a great partner with us for these academies, and we appreciate that so very much. That being said, I'm going to close down this poll, and we're going to move on here. So if you haven't taken the time to click yes or no, if you would please do so. Certainly appreciate that. Thank you, everyone. Do want to make sure everybody is aware about the IMES Marketing Summit in August of this year. Qualification for that is running through June 30th. 3 million trip credits gets you there. If you'd like to know where you stand as far as trip credits, let me know. I can certainly get that information. I do believe I have that compiled now through the end of December. If you want to have a conversation about what we can do to help you get over that 3 million threshold, I'd love to have that conversation as well. But we're really excited to be down in Naples at the Ritz. It's going to be a great trip. It'll be our largest attended marketing summit of all time, I believe, and very, very excited about that. Okay, and with that being said, I'm going to give control over to you, Dave, and get you up and running.
Okay, sounds very, very good. So let me go in and I will. Okay, so I've got controls now?
I believe you do.
Okay, wonderful. So first I want to say is, boy, we got a bunch of people here. We've got a bunch of producers that are online with us today, and I want to I appreciate taking the time out of your busy schedule. You know, this type of business, whether you're on a webinar or whether you're writing up paperwork. I mean, it really is an interruption to what you should be doing, and that is some kind of prospecting, some kind of marketing, some kind of referral, getting something to generate new business. That's what the majority of us as producers are looking for. So seminar marketing is not for everybody, but if the shoe fits, it's kind of like Cinderella. If the shoe fits, then you know what? It can really, really be a godsend for getting in front of people in your practice. So my name is Dave Pimper, and I have been in the business since 1981. 3 years with insurance. In '84, I went into brokerage, and then I've been in the business, of course, for more than 30 years. I've given over 480 public seminars. I think next month in February will be my, I think it's 484 and 485 for the number of public seminars that I've done. And that gives me a lot of expertise within the seminar business. Seminars have certainly changed. I mean, it is a little tougher getting people there. There's more competition now with online. And when I started, there really wasn't such a thing, I mean, that we used as a computer. I had a CRM, and that was about it. Internet was old DSL. Yeah, so things have changed a lot. But you know what? People want to be educated. Remember, prospects want to be, they love to buy. They hate to be sold. And so we don't need to go in and try to sell our prospects or sell our clients. We need to educate them with ways to go in and to solve problems when it comes around their financial affairs. So Social Security, no doubt, is a very, very misunderstood subject. And what happens is that Social Security is complicated. Over 2,600 rules surround Social Security. And what we're going to do today, my goal isn't just to shove it down your throat of why you need to do seminars, why, you know, that certainly is the overtone, but I want you to understand that if you really don't understand Social Security claiming, I don't really see how you can be an income planner for your clientele, how you can really go in and set a budgeting upon retirement. I don't see how you can do that because, remember, Social Security, over 50% of the people either rely all or a major part of their income on Social Security. And I talk to people that make $200,000-300,000 a year, have $1 million plus of investable assets, and Social Security is still a very, very important item, integral item when it comes to the income planning for those folks. So baby boomers, you know, born from 1946 to 1964. I was born in 55. I'm 63 years of age. I'm right smack dab in the middle. You know, there is a lot of money coming on in right now as far as Social Security benefits, because there's no doubt that our generation has been the wealthiest generation. And Social Security is based upon of what you make over the last 35 years, inflation adjusted. So let's go in, and the goal of this next 25, 30 minutes is to give you an idea about Social Security claiming, what you need to know, some of the major ins and outs, and there's many more things that if we coach one-on-one, you know, if you come in and say, hey, Dave, I want to coach with you just to learn Social Security and I'll pay you, we're not going to do that, because what happens is we're looking for ways for you to increase your production, and just knowing Social Security doesn't increase your production, but knowing Social Security and then getting in front of 10 or 12 people from the seminar that have questions about Social Security, and you're uncovering financial facts and fact-finding about what their wages, pensions, investable assets. You talk about RMDs on traditional IRAs and 401ks, and how Social Security can go in and complement those other four pillars of income. That is gold. not just for the client, but for us showing them great financial strategies and products where we're able to help our client first, and then secondly go in and it's a revenue source for income and compensation for us. If you have any questions whatsoever, type it on in. But what I'm trying to say is, this is if you go in and say, hey, I want to get in front of more prospects. Well, in those 5 coaching sessions, and that's how I get paid. I don't get paid through your override. I don't get paid of a hierarchy. No, I get paid from coaching, and I'll go through more of that here later in the presentation for the webinar. But the FMO of IAMS, Insurance Agency Marketing Services, they pay for about 3/4 of the expense of that, because they know that a seminar person, if they're coached up, what happens is the chance of them doing business is better than if they try to do it on their own. And I am the person, hopefully, that can help you to coach you up. Okay, so here we go. If there's any questions, certainly go in and type them in, and I'll be more than happy to answer those at the end of the webinar. So, who are we mailing to? We're mailing to ages 58 through 67. If you work the pre-retired and just retired crowd, perfect demographics. People are coming in for a specific reason for a workshop like this. They're not saying, hey, I'm coming in because I want to go work with Dave Pimper. I want to go in and invest with Dave Pimper. Not a bit. They're coming in for Social Security reasons. And through the process, we can show them maybe how working with specific investment or savings or insurance strategies, annuity strategies can help them. They're asking, when should I apply? What's the best age for me to apply? Coordinating benefits with spouse. Yeah, there were some new tax laws in 2015 that came in, and so they're going in and saying of how can I go in and maximize those benefits for my spouse and I. If I take early, how much do I lose? If I delay, how much more will it be worth? Survivor's benefits, divorce benefits. And then there's asking, will it be there for me? There's so much fake news out there right now on Social Security claiming. You just can't hardly even believe it. I mean, you're going to go, it's scaring people. Like my daughter's 29. She's as smart as a whip. And she says Social Security will never be around when I retire. And I asked her why. She goes, because it's going to go bankrupt. I mean, well, what do you mean it's going to go bankrupt? She goes, it's going to go bankrupt, Dad. I said, well, what goes bankrupt? She goes, there'll be no Social Security to pay out. So then I had explained to her that there is a trust fund that has just under $1 trillion, like ton of money, $1 trillion in it, and that will be depleted as baby boomers start getting those big Social Security benefit checks in, projected in the year of 2035. 2035. So we're talking about 16 years from now. It will be deleted. Now, it will go bankrupt, but I explained to her that there still is going to be people working and putting into payroll taxes. And then I explained to her about FICA and about payroll taxes and about how Social Security would still have 75%, between 75 and 79% of the benefit would still come in. And will Social Security, will the administration, whether it be under Trump or someone else, in the next 5 to 7 years, are they going to make some changes, some serious changes, major changes to Social Security? Yes, they are. Now, if your clients are of the age of 60 or over, I don't think it's going to affect them. I think it's going to, well, they claim if you're born in 1960 and before, it shouldn't affect. If you're born 1960 or later, then it probably is going to affect. So if you're 58 or older right now, you're probably not going to be affected. If you're before that, you probably will. That's kind of what the pundits are saying. Hey, when do you think the last time Social Security ran a deficit? If they ran a deficit, there was less money coming in than benefits going out. Well, if you'd have guessed last year, you're wrong. We're still running at a positive. So you know when the last time was? 1983 under President Reagan. And that's when Social Security really was in trouble. So what happened was he started taxation of Social Security in 1983. If you made above certain levels, then what happens is half of your Social Security tax. And then President Clinton in 1993, 10 years later, thought that's great, so we'll go in and do it up to 85%. Remember, 15% of your Social Security is never taxed. Is absolutely tax-free, no matter how much money you earn, how much money you make, how big your benefit is. If you have any questions, certainly just type it in and give me the information, and I will answer this for you. Okay? All right. So there we go. You're going to see a lot more things like this. Popular Social Security security strategies. Next, this was on the reform in 2015, and talks about file and suspend and restricted. File and suspend only lasted for 6 months, and restricted went away and is phased on in. So why seminar marketing with Social Security? It's timely. Information is very timely. Few people understand Social Security claiming. 3% or less of the people could go up and give a seminar like I'm giving, or like you could give once you're kind of taught up on that. How the laws work, the target age of Social Security, that the people that come, we're targeting 58 to 67. Though that is the demographics. We also may use net worth, may use income, certain zips, could be investable assets, might be homeowners. There's a lot of different things. We don't serve meals with those. You don't have to. You don't have to serve a meal. It's one of the few workshops that you can get by and get enough people there without luring with the meal. Am I against mealed workshops? I'm not. You just don't have to do it with Social Security. Those are more educational in nature. They're less salesy. We hold them at libraries and colleges. Some kind of educational setting. I always say the prospects need us more than we need them. That may not be true, but to get the Social Security analysis, that 11-page report, big for them. Big. Real high conversion rate for setting appointments. So if you mail out 6,000 pieces, we think we're going to get about 35 to 45 people, 35 to 40 people, about 25 buying units. We hope we close half of those buying units for an appointment at the workshop. That's anywhere from 10 to 12 or 13 appointments coming from that workshop. The transitioning from Social Security to actually from income planning or preservation capital planning to close that business, it's a fine-edged sword. It's kind of tricky, okay? But we know how to do that, and we give you the language and coach you through that on how to do it. So will Social Security be there? That's what a lot of baby boomers are asking. So if you were born from 1943 to 1954, your full retirement age is 66. Remember, Social Security has 3 important ages or dates that are important. What is the earliest age you can start taking Social Security on your own individual benefit? 62. If you take it 62, you're going to get a discount. You're going to get less money than if you take it at full retirement age, which we're talking about here. Like I was born in 1955, they had 2 months, so it's 66 years and 2 months. You get it's called normal retirement age or full retirement age. And then if you wait longer than that, then you get an increase. You can wait as long as 70. If you don't take your benefit after 70, you just lose the benefit, which of course you don't want to do. So 62 the earliest, but you get it at a discount. 70 is the latest. Yeah, you're going to add to it once you're at full retirement age or later. Then your middle age is your full retirement age. So full retirement age now is somewhere between 66 and 67. Will this be rising in the future? Yeah, it will. I think if you're 58 or older, it's not going to affect you. If you're under 58, it very well may. Any questions? Type them in. So if your full retirement age is 66 and you take it 62, you're going to get a 25% discount. So if you're supposed to get $1,000, you're going to get $750. You're supposed to get $2,000, you're going to get $1,500. Is that bad? Not necessarily. Some people, that's absolutely what they should do. But a lot of people do take early that really shouldn't. At 66, you get 100%. So if you're at 2,000, you're going to get 2,000. Now, what happens if you delay after full retirement age? It's called a delayed retirement credit, a DRC, delayed retirement credit. If you wait 1 year, 12 months, your benefit's guaranteed to grow 8%. If you go one more year, it's guaranteed to grow another 8%, all the way up to the age of 70. Guaranteed at 32%. The beautiful thing about this is all Social Security benefits, no matter which ones they are, they could be your individual, spousal, divorced, survivor, disability, a child benefit, everything goes up with the cost of living, a COLA. If there's a COLA, it's going to go up. Cost of living started on a yearly basis, not just by the act of Congress from time to time in 1975. There's been 3 years where there has been no COLA, no cost of living adjustment. Every other year there's been an increase. In 2018, last year was 2%. This year it's 2.8%. So get a load of this. It grows 8% from age 66 to 67, and that's saying that your full retirement age is 66, born from 43 to 54. But let's just round that 2.8 off to 3, so it grows 13%. If you're at a $2,500 benefit and it grows 13%, that's $325 more a month for the rest of your life if you delay 1 year. I want to tell you what, $325 to get in the old days, because there aren't hardly any pensions now, but in the old days, you had to work for 7, 8, 10 years to get a $325 increase. No, that's $1,300 in 4 years. So you're going to go in from, you're basically increasing your wage over 50% if you wait 4 years. Where could you do that with a job? Say you're making $80,000, and then in 4 years time period you're making 120. Been at the company for 30 years, probably not, would it? No. So is it for everyone to delay? Of course not. There are specific items that we talk about of when to take early, when to take at full retirement age, when to go in and delay. But I will tell you this, 43 to 45% of their people take as early as they can at the age of 62. Now, there's some reasons that bode very well to take early. There's 3 main ones. The first one is you need the money. Hey, if you need the money, even if it's discounted, you get it now. How about you're not going to live very long? Yeah. Maybe you've had a stroke or you've had heart problems. Yeah. You don't think you'll live past the break-even age of taking it early or waiting, which is usually in the high 70s, 78, 79, or 80 years of age. Think you'll die at 75 or 6. Take early. How about you're in good shape, but your whole family dies early. You got bad DNA. Yeah, there's reasons to take early. But the bad reason to take early is through ignorance. I just didn't do my homework on Social Security. And there's no doubt that married couples do have a benefit over a single person when it comes to claiming Social Security. Yeah, there is. There's no doubt about that. There's no doubt that if a person has investable assets that can turn an income, they can go in and turn that income on instead of Social Security, and then let Social Security grow down the road. I wouldn't have recommended that 10 years ago. I'm kind of embarrassed about that now, but in the last 10 years, I've learned about Social Security, and I jumped in with both feet, and I cannot tell you of how much production and how much of a better advisor I am because I know Social Security claiming. And that's what can happen to you if you set up a seminar and you go through the 5 training classes with me. I've got a couple 3 really good books to read. They're short, 2-hour, 2.5, 3-hour reads, paperbacks, cost about $10 each. But knowing Social Security makes us a better planner. Knowing Social Security does not put money in our pocket, but getting in front of people, and that's where the seminar comes in, certainly can fill that void. And if there are any questions, type them on in. So spousal benefits, spousal benefits. So here's how it just basically works. Let's say that John's PIA stands for primary insurance amount. That's your amount at full retirement age. PIA, primary insurance amount, at FRA, full retirement age. PIA at FRA. They like their acronyms. John's is 2,000. He's the husband. Jane's the wife. And she's 800, her PIA. Now, it can be reversed, but most people in that baby boomer generation, most of the men have made more than women because most of the women did stay home with children for a time. Okay? Doesn't happen as much now with the millennials and the Gen Xers, but it certainly did with the baby boomers. So what happens is if Jane applies for full retirement age of 66, what's her benefit? Well, she can take either all of hers, which is 800, or as long as John has taken his benefit and started it, she can take half of his. All of hers are half of his. Well, half of his is bigger. She's going to get $1,000, $200 than her own benefit. If John does not take his, then she's going to only get $800. He has to have started his benefit. So spousal benefit is half of the primary worker's primary insurance amount started at full retirement age. If she's younger than that, then it will be discounted. Okay? Pretty simple. Spousal benefit. Divorce spousal benefit. We got more options here. Here's what I call the triple play if you're divorced. If your marriage lasted 10 years or longer, the person receiving the divorce spousal benefit, they're not married. They're currently unmarried. The ex has to be at least 62 for them to take. If those three kind of moons line up, then all of a sudden you can use your spouse just as if they were still married to them. Not legally, but through the eyes of Social Security. And remember I said that spousal, two people have more flexibility for better benefits than a single person has. Yeah, pretty cool. And we'll talk about restricting applications, which you can also do with a divorced spouse. Okay? All right. Now, survivor benefit. What about when someone passes away? So this is the example, Joe and Julie. They're married. They're both full retirement age. Let's say that they were born in 1952. Their full retirement age is 66. Or 53. Now they're turning full retirement age like today. Joe's benefits $2,000. Julie's benefits $1,200. Joe dies. Julie benefit of $1,200. She can jump up to Joe's benefit of the full $2,000. She drops hers, takes his. So $2,000 and $1,200. The family benefit is $3,200. Now the family benefit's going to be $2,000, but still Julie's getting an extra $800 from just her benefit alone. It's pretty cool. Yeah. Not that Joe dies, but pretty neat that Julie can jump up to his benefit. The trick on this is that it doesn't happen automatically by the Social Security Administration. In fact, and maybe you've read this, that because of the government shutdown, partial shutdown right now, Social Security is one of the areas that was tight anyway with employees, but now they're even putting in less time, taking less appointments, less available. But you can do this online, but you can do it face-to-face also at your local Social Security Administration office. But they have to be notified that there was a death, and they have to be notified that you're jumping up to your spouse's benefit. If you don't, you're not going to get it. Really sad story. Had a lady about at least 5 years ago, might have been 5 to 6 years ago. She attended one of my Social Security workshops, seminars, and she came in and she said, something you said kind of disturbed me. She said, my husband's been gone for about 5 years. And I talked to some people, and I never did jump up to my husband's benefit. I didn't know really that I could do that. and my benefit was $1,300. His benefit was $1,800. That's $500. That's $6,000 a year. 5 years, that's $30,000. She never did, and you know what? She lost it. She lost the benefit. And I told her, don't kill the messenger. I'm just telling you, we were able to get her 6 months of retroactive benefits, which basically was about $2,400. But isn't that something that if she would have just gone to my seminar, I would have saved her. I would have saved her almost $30,000. That survivor benefit has to be reported. A lot of people don't know that. Okay. Coordinating spousal benefits. So in 2015, it was called the Bipartisan Budget Act. And what it did was file and suspend, which you heard a lot about, was done away with in 6 months. It phased out in 6 months. Restricted application has an 8-year phase out. So there's still people that can get restricted application. There just are fewer. Now, let me tell you this. A lot of people that I was talking to said, oh boy, all the sizzle's out of Social Security now. There's no reason, if you do Social Security workshops now, all the sizzle is gone because file and suspend has been waived, and all of a sudden restricted application, you have to be born, before January 1st, 1954 or before, and there's lesser and lesser people that is going to be the case. There still are a lot, but every year there'll be lesser, excuse me, because that was the phase out. So they said, we're not going to give workshops. We've had successful workshops, but it's going to be bad now. I said, keep giving them and see if it's slowed down. I have seen absolutely zero slowdown. Social Security is complicated. The claiming part of Social Security is something that you don't learn in grade school, junior high, high school, college. It isn't something that my son, 25 years, or actually he's 27 years old. He just had his birthday. 27 years. I got a son, 27, a daughter, 29. I promise you, if right now I said, hey Sam, you know what? The government's raising the full retirement age from 67 to you to 70. You know what he'd tell me? Give me another beer. Who cares? They don't care because you know what? They don't think it's going to be there anyway. How about when we were growing up? I'm 63 years old. I was born in 55. When I was going in, I was working in the 70s. First thing I heard was you better invest on your own because Social Security will never be there. Well, guess what? After 70 plus years, still here. And you know what? I truly do believe where there are going to be some changes, but in 70 more years, it's still going to be there. It's a great social program. Supposed to cover all of your expenses in retirement? Of course not. Is it a supplement to other income sources? Of course. That's how it was set up. So the Bipartisan Budget Act of 2015. So restricted application, it's still around. Okay? It's still around. So let's do this. Let me see if I have a slide on that. Yeah, restricted application. So here we go. Mike and Mary. Full retirement age. They're both 66. Mike's PIA, that stands for primary insurance amounts, $2,000, and Mary's is $800. Mary files for her benefit at 66 at full retirement age. She files for hers. Mike files for a spousal benefit. So let me show you how this works. Mary files, she gets her $800 in. Mike now is going to go on in. He's going to start his in the eyes of Social Security, and he's going to stop it. And he's going to apply for restricting his application only. You can take one spousal benefit at a time. Can't take two spousal benefits simultaneously with a married couple. He starts his, he stops it. He gets no income from his, but he can go in and take a spousal benefit from Mary. A spousal benefit is half of her benefit. He gets $400 from her as his grows 8% a year. From 66 to 67, 8%. From 67 to 68, 8%. And remember, COLA is on top of that. This year, cost of living allowance, which changes each year, is 2.8%. So you're adding almost 3%. So that 8 is almost 11. actually 10.8%. What a big deal. Well, that $400 that he's getting, half of Mary's primary insurance amounts of $800, free money. 400 times 12, 4,800, almost $5,000, shy of 20 grand over 4 years, free money. Then he turns on his benefit at a much higher amount, and all of a sudden now Mary can go up from 800 to 1,000 because he's not going to take a spousal benefit. Mary can take the spousal benefit. I mean, there's a lot of moving parts that come with this, and believe me, if you get a little confused with me going through that, don't worry. Once we're coaching together, I promise you, once you coach and once you talk to a few people, you will truly understand of how Social Security works. You will truly understand of how it fits in to an income plan for your folks. You will truly go in and get in front of more people that you've got a chance to do business with. I'm just saying this. It's not for everyone. If you're afraid to go in front of crowds, no, this isn't the right marketing system for you. If you don't have enough marketing money to go on in, because it's expensive. It's a pay to play to get people there. We mail out 6,000 invites, and on those 6,000 invites, it's going to go in and cost you about $3,360. So you're paying over $3,000 to get the people there. Well, that's pretty expensive. It certainly is. But you know what? We want to go on in and we want to get in front of 10 or 12 people. That's very, very important. If you have any questions, certainly, type them on in. Okay? So let's talk a little bit about what Social Security can and cannot do. You know what they can't do? Let's talk about first what they can do. They can give you what your best benefit is now. They can tell you how much you're entitled to right now. They can't, and they're not supposed to, project future benefits through scenario planning. What's scenario planning? Filing a restricted application if it's possible. You know what? They can't help you. It says innovative strategies designed to maximize benefits. They can't offer advice. You know why they can't offer advice? Because they don't know your full financial picture like an advisor does. We go in, I want to know, hey, how many expenses, what are your expenses at? What are your living expenses right now? What kind of tax bracket are you in right now? What kind of investable assets do you have right now? Do you have any pensions? Do you have any farmland, cash values, or life insurance? Can you imagine the government asking those personal questions? That's why they can't offer advice. Isn't that bizarre? If you go to the Social Security and say, hey, I need some advice, they cannot give that to you. Well, what's that do for us? The advisor, the insurance agent, the broker, the RIA rep. Yeah, it opens up just a gold mine of opportunities to give that right information, that educational education to help your client make a financial decision. But we can't do it just by, I love when a person will say, hey, I don't want an appointment, just tell me when my best time to take is. It isn't that easy. It isn't finite. If you go to five CPAs and ask what's 3 plus 3, everyone will say 6, won't they? Because 6 is the absolute finite correct answer. It's not 5.5, it's not 6.5, it's 6. If you go to 5 financial advisors with exact same information, you know what that they're getting, you're going to come up with 5 different plans. What's interesting about Social Security, it's subjective of when you take. Should you wait off, maybe take income from your assets, then turn it on? Yeah, it depends. I mean, it depends on how long you think you'll live. It depends on the amount of assets you have right now, on the type of lifestyle, the type of expenses. There's a lot, and we go through all of that from a planning standpoint. Is it complicated? It sounds complicated on the onset, but in reality, once you get in the groove of this, and I'm coaching you, helping you, you know what? Then actually it's a fairly simple, a fairly easy prospect. Look at this, right from taking the claim on Social Security. It says to the person working in the Social Security Administration office, you're supposed to provide enough information so that claimants can make informed choices, but do not give advice. That blows me away. And that keeps us in the business. I work it off of the 5 pillars of income: work, pensions, income-producing assets, required minimum distributions, and then how Social Security, how it complements those other 4. And you know what? How much money do we make from knowing Social Security? Nothing. How much do we make to know what their wages are? Nothing. Pensions? Nothing. But in RMDs, unless they invest it, nothing. But income-producing assets, what do they have in their 401k, IRA, Roth IRA, simple set plans, HR10s, KIOs, CDs, cash values, real estate, all those different things. And I'm finding for something here, they're either unhappy with their advisor, they're unhappy with the return, and they would consider making a move. That's the name of the game, and that's what we do when we work with Social Security, because Social Security alone, that will not put a penny in our pocket, but working with investable assets, that does, and we ask for them every single time. Okay, every single time. So, horse's mouth, as we're finishing on up here, and then I'll shoot this over to IAMS to see if there's any type of questions that are here. But we use horse's mouth. It costs $500 for a year, a little over 500, like 520. But that has the calculator. That also has the PowerPoint, which I've redone, made a little more user friendly. But we could really recreate for that amount of money in house. I presented this little promo, a little propaganda on Dave Pimper, but not many coaches out there have done nearly 500 public workshops and still doing them. I still do 15 to 20 every single year. I try to make a complicated subject much easier to understand. If some of that went over your head, well, it should have. Because if you don't really understand Social Security, you're not going to follow. But once we're coaching together and I slow it down and we one-on-one really kind of role play into it, a lot of stickiness comes to Social Security coaching. I have over 30 attachments, a lot of those articles. So if we talk about file and suspend, I may have 2 or 3 really good articles to go with that will help you understand what we're talking about, or survivor benefit or divorce benefit or similar things. That one-on-one coaching, we have 5 sessions, they're about 45 minutes each. So I get paid for coaching, as I said before. Coaching costs $750. That's how I get paid, $150 per session. I've coached for over 25 years in the profession and over 8 years with just Social Security. I've done over 75 workshops with Social Security claiming. And the coaching, $555 of that is paid through a scholarship. As long as you qualify, meaning you're contracted, etc., then IAMS, the FMO that I coach for, will pay for $555, meaning you have $195 that comes out of pocket. It's a true turnkey system. We give you the letters, we give you everything, and I've got 3 administrators, Lynn, Amy, and Lori, and mainly Lynn is the one that really works with my coaching clients. She's very good. We set up the demographics, and like right now we're doing one in Charlotte, and this person, we're telling him of where the best places. We found where the libraries are. We do a lot of that back office for you. And of course, once you coach with me, and as long as you're still doing business with IAMS and contracted, you can contact me as often. I always say within reason. People normally don't go in and abuse that, but I'm available to help you, not just with Social Security, but of course with business in general. So I'm going to leave with this, and we'll shoot it on over to Scott real quick. But I say procrastination is my sin. It brings me constant sorrow. I really shouldn't practice it. Perhaps I'll stop tomorrow. Tomorrow never comes, does it? Don't let it happen to you. Don't just waste time for an hour on this webinar without taking action. Education without action is zero benefits. Is zero. Taking action is what it's all about. And I'm going to have you put that poll up, Scott. So if you mark yes on this poll, all that's going to mean is you're going to get a call from office. Lynn, Lori, or Amy, one of them, is going to give you a call and say, when is a good time to meet with Dave? I got lots of appointments, not just coaching appointments, but a lot of production appointments. And so we'll work it for your schedule and my schedule on the phone. It won't be one of my assistants. It will be talking with me. But let's just see if Social Security, how can that play into your marketing schedule? Can it help you? It isn't for everyone, but I'll tell you right now, I think it's the best seminar going out there. It's the only one? No, but it's a very, very good seminar system. So I hope I talked to a lot of people, and I'm going to scoot this over to you, Scott.
Hey, Dave, thank you for that. The poll is up and live here right now. And what we're asking is if you'd like more information on Social Security claiming. If you click yes, which I'd highly encourage you to do, you will receive a phone call from one of Dave's administrators to set up a time to chat with Dave. Again, 15, 20 minutes for that conversation. Very, very worthwhile just to see if this is something that's worth you pursuing in your practice. So I'd highly encourage everyone to click yes on that and take advantage of that conversation with Dave. Dave, you got a few minutes for a couple of questions?
Absolutely.
Okay. First one we came in, and I think this is a great question. Does the Social Security system that we're utilizing here integrate with a retirement income planning report that we can show to clients?
You certainly can. In fact, Scott, I know you mentioned something about retirement analyzer, or maybe they have eMoney or Money Guide Pro or one of the many type of income plans. So we could certainly, what's one of the beautiful thing about Retirement Analyzer is that we have that available, IAMS does, for, again, I say qualified folks that come on in and that are using the seminar system. Does the workshop itself go in and talk specifically about the income planning? No. We want to keep this around Social Security. We don't want to mention fixed indexed annuities. We don't want to mention mutual funds, managed money. This is not a product-oriented base. This is very much of an educational, works from an educational standpoint, so people are coming in for education. They're coming in for ideas and choices. Once you're in front of them, now all of a sudden you're going to go in with what your expertise is.
Absolutely. Absolutely. Next question is coming around a person whose full retirement age is 67 and talking about deferring in the increase, Dave. So someone who gets the 8% increase, but their full retirement age is 67, will that roll up or give them the 8% up to age 71, or does that 8% still stop at age 70?
Sounds like a fixed index annuity person, doesn't it?
It does.
A roll-up, yeah. No, that's a great question. It's a great question. No, if you're 67, you don't get 4 years of 8%. You just get 3 years of 8%. So if you're born in 1960 or later, from 1960, so what happens is if, you know, full retirement age is 67, so now all of a sudden you got 24% is what, not counting inflation, of how much it will grow, not 32%. Now, I will say this. Do I think they're going to increase the age of full retirement age from 67 higher, 68, 69, or 70? I absolutely think they will. Think about this. Back in 1935, when President Roosevelt, FDR started Social Security, 1940 was the first check. Scott, what do you think the average age of an American male was of passing? What age would be 1935?
In 35, I'm going to say 70.
63. Is that wild? And you know what? They started paying benefits then at 65. Well, I like them odds, you know. So yeah. But going back to the question, it would only be 3 years. Then there's not 4. But I do believe that in the next 10 years, 5 to 10, you're going to see that age probably go up, and then there'll be more ability to increase your yearly delayed retirement credit. I'm going to do one more quick, and then we'll close this on up because I see the questions here. But we got several, and you know what? I don't want to make this any longer than it needs to be. We're running a bit over time. But a person asks here kind of how much money comes in from the average seminar. And this is, and I know this, okay? Now, I'm pretty good at what I do. So maybe in the beginning you may not be quite as high as this, but here's what happens is we mail out 6,000 pieces. We hope to get about 40 people there, give or take 35 to 45 people. And we do it between 2 nights. One mailing, maybe a Tuesday, Thursday, or a Monday, Thursday, but 2 nights. And in those 2 nights, if you have 40 people that come, you're going to have about 25 or 6 buying units. At 25 or 6 buying units, you're going to go in and normally, if you're really pretty darn good, you're going to close nearly half of those for appointments, but at least a third. So I want 10. I would like to get 10 appointments. You know, Ed R. up in the Northeast, up in Connecticut, Scott, get a load of this. He does workshops, and he's done a lot of Social Security workshops, but Ed had 28 buying units, and I would hope to get 14 appointments, and the average person 10 or 11. He got 26 appointments on his last Social Security workshop out of 28 buying units. I almost hate to say that because it sounds like I'm stretching the truth, or in the South they say I'm telling a story, but I'm not. And they've done business already, but they got a ton in the pipeline. And that's what it's all about. So what happens is those 10 to 12 appointments, let's just say it's 10. About half of those will not have the money or the need to go further for the appointment. About 5 of them will, and it will go to a close with 5 of them. And if you're pretty good, you should close about half of those. So if there's 5 or 6, you close 2 or 3 people. But let's say you just close one, and the average fixed indexed annuity, I would say premiums around 70, 80,000, 80,000 at 6% or 80,000 at 7%. Yeah, you're talking $4,500 or $5,000 of commission. That would be at a minimum. What I try to do is 250 to 300,000. That's what I would hope would come on in my last Social Security seminar. I had a nice rollover on a 401k that was selling out. It just got turned into an IRA, and then he worked it with me. It was 660,000, but I did another 450 from that. So we did over $1 million. Does it happen every time? No, not every time. But you know what? If I can get 250, 300,000, I'm pretty darn happy. So I just wanted to go through that. That's kind of the specific. So I'm gonna kind of end on this note. Is that if you really want to gear up your production for 2019, and you have a couple $3,500 or $4,000 that you can spend for marketing, I will tell you right now, even if you've done seminars in the past and not had good success with it, when you have someone, and I don't mean to beat my chest, but I'm a coach. I coach you up. I work with you. I don't care if you, when you're driving down that interstate of seminar marketing, if you get on the shoulder or even the rumble stripper shoulder, but you want to stay out of the ditch. I keep you out of that ditch. I answer all the questions for you. You get an actual hour presentation of me giving the seminar itself. There's a lot of tools that are for your success. I'd love to talk with you, and we'll be closing this poll down here just in a second. But if you mark yes, we'll talk for 25, 30 minutes and get an idea of what you're doing. And if there's a fit, wonderful. If there's not, maybe you can think about after you're hanging up and say, I'm sure glad I talked to Dave Pimper at least for that 30 minutes. He gave me some good insight. And Scott, I'll let you take it from there.
Hey, appreciate it, Dave, and thank you so much for your time. Do appreciate everyone that took time out of your busy schedule to join us. We know an hour and 10 minutes with us is an hour and 10 minutes where you're not out prospecting and writing business, so we greatly appreciate it. Go out, have a great sales day, everyone. Dave's staff and I will be following up with you. So again, we do thank you for the questions. Thank you for your time. Have a great one, everyone. Thank you.
Thank you, everybody. Have a good one. Bye-bye.